What's the mood like here in Davos?
Well, it's interesting. I think people came into this week, feeling maybe a bit gloomy. But the data points that have been coming through this year on the economic side have maybe not been quite as bad as people expected. And although I've seen some reports that say, the mood here is very optimistic that this week, I don't think that's right. But I think definitely at the margin, people are thinking, well, maybe we're avoiding the really bad scenarios, the really deep recession risk. Maybe the risk of that's got a little bit less. So I think people are probably leaving a little bit more positive than they came in, and I think that's a good thing.
Are capital allocators asking the right questions about where capital needs to go next?
Now, I think that is a super interesting question, because I think when I look at the set of conversations I've had this week, and I've had conversations with at least 5 or 6 different regulators, I think there is a bit of a disconnect between the fear of systemic risk, the continued drive from a kind of macroprudential point of view to get as much risk out of the system as possible, against the fact that if we're going to continue to accelerate plans on decarbonisation, to get capital, to get into some of these projects and some of these initiatives so that we can really start to move on the decarbonisation agenda. Also Ukraine up there, there's going to be a rebuilding agenda on Ukraine coming through over the next few years. If we're going to get the capital for that, it needs to come from somewhere. And if you're constantly trying to squeeze the risk out of the financial system, no risk, no return. Yes. So I think there is a disconnect. And I think this week we've seen some of these conversations try to be initiated to bridge that gap, which I think is really constructive.
How do you square that circle?
Yes. Well, I think you need to think about what sort of risks. I mean, the question I posed to more than one regulator this week is, what sort of risk are you willing to tolerate, and where do you want that risk to be? So, is it leverage? Is it liquidity risk? Is it volatility risk? Is it absolute risk of capital loss? What risk are you willing to tolerate? You can't take it all out of the system. How much and where? And think through that framework, because if we have a little bit more guidance on that framework, whether it applies to banks or insurance companies or asset management companies or anywhere else, think about where that risk should sit, and then we can start to figure out how we get the capital to the right places within that context. But I think we need to square that circle.
And you think we'll have answers pretty soon?
You're talking about regulation, right? Nothing is ever pretty soon on that. But I think we can see a little bit of a change in thinking and approach. I think the FSB and other regulatory umbrellas like that can help us think through where do we want that risk to be, and then we can start working on constructive suggestions.
What's your outlook for active investment managers in 2023?
I'm an active investment manager for the most part, therefore of course I'm positive about it. But I think it's been fascinating. I think you have, if you look at the C-suite in the companies that we follow, the many thousands of companies that we follow around the world, companies have had to deal with a lot over the last 3 years. They're very seasoned. They understand how to react quickly when they need to. That muscle is really well developed, and it's more, businesses are more resilient than they were, for sure. So what we can see is that, as the world chucks different things at us, I sometimes call it, we're in like this kind of multiverse, everything everywhere all at once. Stuff keeps happening, right? Companies are better at adapting, and we are seeing the move to digitization, the move to automation, building, broadening supply chains. That's happening quite quickly. And for active managers, we can differentiate between the companies that really get it and are moving fast on some of this stuff versus some of the others. And that is a great environment for an active manager. So I think we're pretty positive. We do see stuff coming through now that we get quite excited about.
Do you have hiring plans, or will you get bigger?
So hiring is interesting, because I think everybody knows everywhere. Actually, the war for talent has been really tough. Some of the challenges have been actually, how do you hire people?
Finding the right person.
It's finding the right. We are increasingly tech businesses, and we're putting a lot of emphasis on that. Now, if you go back, I was speaking to the head of one IT services company yesterday. A year ago at this time, they were experiencing well over 30% attrition. By the end of the year, it was down to 20%. First quarter actually has started, it's like 11% annualized. And I think that's quite interesting. So I think the attrition environment has improved. That means you don't need to hire as many people because you're not replacing those that have gone. But I think it also shows you that this sort of spur towards automation, which when unemployment is as low as it is, you need that automation, that productivity improvement. So I think you see a changing shape in our industry, and that's kind of what we're saying. There's a little bit of a change in the jobs that we have, but the sort of broad picture is pretty steady state.
And how are you thinking about compensation? This is kind of a hot topic.
Yeah, well, it was obviously 2022 was a tougher year for compensation than the previous year, which was was a terrific year for us. It was one of our best years ever. So it was tougher this year, but our people, they understand that it's a kind of profit share kind of model, and in good times they do well, and in bad times or more difficult times, then they'll do a little bit less well. So, in general, I think our compensation round was well taken. So, but I mean, there is a bit, clearly in this environment, there's more pressure on compensation than in a really hot market.
Yeah, fair. And talk to me a little bit about crypto. So what does the FTX demise actually mean for crypto investments?
So if you look across, the conventional financial system, if you want to put it like that, there are certain key premises which are out there, independent custodians or depositories, segregation of client assets, and some of these things it looks like just weren't adhered to in what was a relatively unregulated activity. So we certainly see more demand for, if you like, quality and separate custodianship, and I think that the good providers of that will continue to do well. And I think we will see some more of these principles that you see in other parts of the financial system come to the crypto world. So I think it's been a chastening experience. It shows that if you're doing similar sorts of activities, there's reasons for the regulations that we have in other parts of the world, and I think that's the approach regulators in general are taking, although there are different regulatory views on this, but similar activity should have similar types of regulation, and I think that will be the direction of travel over time.
Does it change your relationship with crypto and some of the offerings that you may have put in place?
Not really, because we've tended to adhere to those principles anyway, because that's what our business is built on. It's different for some of the startups in this space who've never sat inside a regulated entity and therefore don't know what those principles are quite as intuitively. So I don't think for us, I think we still see interest in, I wouldn't say crypto per se, I would say digital assets more generally, because they do bring certain different characteristics to it. And the continued research that central banks are doing on around digital currencies, so more broader than just crypto. We tend not to talk about crypto, actually. We talk about digital assets. And I think we've talked about this in past years as well. It's the underlying technology, the distributed ledger technology, the tokenization of other assets that can come from that is possibly in the long run going to be the thing that the industry benefits from most from the invention of crypto, 10, 50 years ago, whatever it was.